Hey everybody, Adam Tracy, and I wanted to talk to you about the IPO versus the STO, right? And I've done a lot of IPO work in my life, and just the 10,000 foot view of what is a rather complex process is that the main purpose is that you want to obtain a public listing for your company's equity, right? So people could trade, buy, sell, etc. And in order to do so, you have to file a registration statement with the SEC, which requires a PC AOB audit and this, large disclosure document, which is this iterative process. You send it to the SEC, they come back with a comment letter, explain this, you said this here, but you said that there, blah, blah. And you go back and forth, back and forth, back and forth. And depending on, the complexity of what you're trying to do or just, how good you do it, it can take, 3 months to get through the SEC component, right? But that's not all, okay? Because the purpose of the S1 registration statement is simply to say that when declared effective by the SEC, the shares being offered pursuant to that registration statement can be free trading, meaning retail investors can buy and sell, right? Now, compare that to a private offering of stock, and you have Reg D, where one, the shares are not free trading, meaning they cannot be sold, right, or placed on a market for trading. And you have the restrictions of Reg D, which is, of course, accredited investors, filing a Form D, all this kind of stuff, right? So you're limited in a few respects, right? Reg D is obviously easy. You don't have to file your PPM or do anything like that. But there's downside limitation. And I'll come back to that. So the IPO process, right? You get through the SEC, but then that's not an automatic listing on NASDAQ or OTC or the NYSE. You have to go through FINRA because FINRA is the gatekeeper to the markets, right? Like you get your ticker symbol from FINRA and all this kind of stuff. And you get something called the 15C211, which is basically your ability, for lack of a better term, and I'm, speaking at a higher level, to list on a national securities exchange. So that happens, and really, in many respects, the FINRA component, albeit much lighter in terms of what goes into it, is actually sometimes more difficult, right? And FINRA is this quasi-governmental. It's technically private, but it's a SRO. So you have those two processes. They can kind of run parallel, but not really. And then you go through the IPO, and with anything, the challenge of a lot of IPOs is, especially smaller ones, is getting people to buy the stock, right? And getting a float. Because you can go public, and if you look on OTC markets, overwhelmingly, right, like the pink sheets as it's colloquial known, overwhelmingly, these shares don't trade. So what's the value? What's the value of being public and paying the money to remain public, pay auditors, pay the exchanges, do all this kind of stuff if there's no liquidity in your publicly traded security, right? So we go to STOs. Well, right now, okay, there is no national securities exchange that will list a security token. Now, you also have the ATS, the alternative trading system, and there are ones that exist at an institutional level, and there's attempts being made to, register them so retail investors can, access that. But still, there has to be this bridge between, you have to follow the same process, right? For the STO, like the STOs as they are today are just private offerings. They're Reg D offerings, okay? Or Reg S offerings if it's, to non-US investors. And the problem becomes, okay, fine, you have this ATS that may exist, but right now we still have to follow the same process as we would in a traditional IPO. So registration statement with the SEC, and then FINRA, right, the market gatekeeper, which would give you the ticker and the 15C211, right, through the broker-dealer that you're partnering with. And that would get you onto the trading markets. You would have a freely tradable security token, meaning like I could go on, open an account with my broker and buy and sell shares, right? And that's the liquidity piece to it. Okay. So that doesn't really exist right now, right? Like there isn't that bridge or really the framework within FINRA, right? There is with the SEC, but not so much FINRA in terms of how you bridge from having a valid, effective registration statement to listing on a market, because the markets really are nascent, not really, there, and it's sort of this whole thing. So as it stands today, and this will change, right? This will absolutely change, right? Because you're seeing NASDAQ and talk about this. Well, your average STO is basically just a private offering, right? It's a Reg D or a Reg CF, like a crowdfunding offering, which, you're limited to $5 million, but you can sell to retail people, right? Like non-accredited investors. But irrespective of the case, there's no active market, right? So I look at it like this. If, somebody approached me and said, hey, do you want to invest in my laundromat? Cool, I'm going to do it. So I buy, whatever, 10% of the stock of the laundromat. Great. Okay, what do I do with it? How do I make money? Well, I have to pray and hope that the laundromat makes money. And not only do I have to pray and hope that the laundromat makes money, but as a majority investor or a smaller investor, I have to hope that those with, that control the board or the membership issue a dividend, right? In the absence of having some kind of preferred stock, which, gives me a right to a dividend or whatever the case may be. So with an STO, it sounds great. And I see a lot of people who are very successful with STOs or are investing in STOs simply because the securities are tokenized, but for no other reason. So when you're evaluating an STO, you have to look at it just like you would like the laundromat, right? Is it going to make money? And is there some dividend right or preference that's going to make sure that if it does in fact make money, I'm actually going to receive payment therefore, right? Like through a dividend or what have you. And the problem becomes, again, it's really, 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 pardon my language, fucking hard to make money. And, for a lot of these STOs, you're talking about like very early stage ventures. And, those, you can go list a publicly, again, it took Amazon a long time to turn profitable, right? But they were public the substantial majority of that time. So as an investor, if I liked where they were going, but maybe they weren't making money, I could always sell the stock. And as they made announcements that said, sales, grow year after year, sales growth is, we're approaching profitability, whatever, the price went up. It was good news, right? I mean, there's tons of companies that don't make any money. Look at all the tech companies, look at the drug companies, right? They're waiting on some decision from the FDA that may never come, and like every time they get like, hey, well, it looks good, the stock goes through the roof, right? They're still not making any money, but the stock goes up, and you have the ability, because it's gone through the registration process and it's listed, that you can sell it, and that's your liquidity event, and that's how you investors make money. But with an STO, the liquidity event is actually receiving some kind of distribution of the profit of the entity. Well, if it's not profitable, legally, they can't pay you anything. Like legally, they cannot pay you anything, right? Like that's a different thing. But if it's equity, if there are not profits, it is illegal to pay a dividend, right? So when you're weighing the options, right, like you can't look at an STO anything other than what it is, which is a private company offering. And the key point is this. If today, right, and again, this will change. Today, if somebody came to me with the laundromat idea and said, hey, listen, laundromat, yeah, it's okay. We're selling equity, crazy neighborhood, may not do so well, right? Let's say it's a laundromat in the middle of Beverly Hills. No one's going to a laundromat, maybe a few people, not many. Okay, but let's say there's a laundromat in, a different part, right, where people will go. Great, okay. Well, they're going to tokenize the likely more profitable laundromat versus the one in Beverly Hills, which isn't probably going to make that much money. Which one would I invest in? I would invest in the one in Beverly Hills because even, right, irrespective of the profitability, I'm buying just a traditional share of stock. And if they were inclined to do so, there's a roadmap and a path they could follow to become publicly traded, right? And I could sell my shares, right? Whether they do or not, who knows? But that opportunity exists. With the alternative, the tokenized equity, there is no pathway right now to list. So I have to pray and hope that they make money and distribute the money that they make, right? So the STOs are nice. The fact that they're tokenized makes zero difference at this point, right? It's cool, but it just doesn't make a financial difference. So when you're weighing the options between the two, you really have to consider like what's saleable, right? And what gives investors a liquidity event or a chance for a liquidity event, right? So I could go on for an hour. I'm not going to. No one would watch anyway. But you have questions about it, and I'll follow up on this in terms of liquidity. There's all these other issues that kind of go into it, but the seminal question being like IPO or STO, you have to look at what the exit is for those investors, right? And who the investors are. Because if they just like it because it's tokenized, have at it. But if they're savvy, they'll realize that, God, I really have to make sure you make money. And as an early stage venture, you may not make money, at least for a long time, right? So my investment horizon's way out and it doesn't fit with me, so I'm not going to invest. So that's that. Adam Tracy, no E. Everybody, no E. TRACY, no E. .io. Hit me up. Happy to discuss, go through it, help you out in any way I can. Talk to you next time. Cheers.